Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on some names here and going to do a bit of a different video as far as looking at a longer term perspective from the eyes of an investor or a longer term swing trader or someone who has a retirement portfolio that they want to potentially protect or look where to go in market weakness. It's obviously really easy to do things when the market's at all-time highs and the tech sector's going crazy and we have money growing on trees for bulls. And when things shift, we need to know where else to be looking to put our money. There's a couple important things to distinguish. Outperforming, that word. Outperforming does not mean going up. If the S&P 500 drops 10% and the housing sector drops 5%, it's significantly outperforming the S&P 500, but it still dropped 5%. So we have to be aware that that means we can still go down in that scenario. So I want to look across all different sectors, all different places to be putting our money, and look to see what is holding up a bit better than the S&P 500. Obviously, the last month we've seen significant pullback in the S&P 500. We have the trade war narrative. We have a little bit of uneasy uncertainty in the market right now. It's not enough to cause a fear collapse at this point, and the bear volume's not too significant. I just talked about that, and I did the S&P 500 market rundown video, and it was probably one of the longer ones that I've ever done as I looked at monthly timeframes. So now that I know what the monthly timeframes look like on oil and on the S&P 500 and the tech sector and the financial sector, I want to compare it to these other places and see, are they holding up better? And perhaps they are a place to be looking to put some funds when there is a bit more uncertainty in the market. So, of course, we have the utility sector, XLU. And utilities are generally a safe haven where funds move to, just like gold. Gold and utilities, when the market is showing weakness, money generally goes to these sectors. So looking at XLU on the monthly time frame, we're coming off the all-time high. So is the S&P 500, but look at the monthly candlestick. The S&P 500 closed at the low of the month, and we have the utility sector holding on a lot stronger. We definitely pulled back on the weekly time frame here, but we have an uptrend. Key support for me is 56.66. As long as that holds, the bulls have really complete control right now. And look at on the daily time frame, yes, definitely got hit this past week, but overall, still much stronger than the S&P 500 on the longer term timeframes. So keep an eye on utilities, and whether that means you're looking to play XLU, there's some leveraged ETFs that I assume have low liquidity. I didn't look at those, but generally in some of these sectors, the ETFs and leveraged instruments don't have that great liquidity. But you can also be looking at individual names in those sectors and try and find names that have good looking charts. So for utilities, I was also looking at some dividend stocks. So dividend stocks is another place where people go when they want some guaranteed money. When there's not guarantee of stocks and things going up, they want guaranteed dividend payments. And BEP is one of those in terms of a utility that is paying some solid dividends. So I want to look, what's that monthly chart look like? And again, it's in the green. It is clearly holding up much better than the S&P 500. That being said, we're also not coming from the all-time high like the S&P 500 is. So in the short term, in comparison, it's still definitely in a weekly uptrend and stronger than the S&P 500, so holding on pretty well. And again, those dividends are a potential reason that we are seeing the market respond a bit more generously to the bulls being able to keep control. So the weekly higher low here is 30.70, and bulls still holding on just fine to the uptrend from the bounce. Again, a little bit uncertainty this past week, but nice end of the day on Friday. When you see that day and that kind of close, when you see what the S&P 500 does, or did on Friday, it definitely stands out to me. Also keeping an eye on the housing sector and home builders. And I look at this monthly chart and I say, well, it's not really standing out. It's doing what SPY is, closing low on the month and closing fairly weak. It's setting up for this monthly equilibrium that we're seeing in the financial sector. We're seeing it in oil. We're seeing it in IWM. We're seeing it all over the place in a lot of places. So for XHB to be doing that as well, that tells me, it's pretty much doing what the market is doing, and there doesn't really seem to be much of an advantage to be looking at the home builders ETF. So another dividend stock that caught my eye is EPD. This is in the energy sector, and we are looking at a monthly equilibrium. So I'm interested in this setup because, again, doesn't really stand out as much stronger than the S&P 500, but just keeping an eye on this monthly pattern. I really love equilibriums, and if you know me, you know that by now, but I love waiting for breaks of tightening ranges. So we have our low, high, essentially a double bottom, essentially a double top, and we're going to be looking for a monthly higher low to form, but I can just tell that this is going to be a longer term pattern to be watching into Q3, Q4, and of course, if it were to get a bull break, and look at all that resistance lining up in the low 30s, but you get a bull break over those levels, and certainly would be worth holding on to as a dividend paying stock that is also making a clear multiple year bull break after trading almost sideways in this channel for 3 years. So this would be another name that I'd be keeping an eye on. Also, REITs, specifically in the marijuana sector. So the marijuana sector has been getting hit really hard in the last 4 to 6 weeks. The reason being it's very speculative, very high risk, high reward. So when we have risk on, that means we see a lot of pullback as money is exiting the higher risk sector. When the S&P 500 is at all-time highs, that high risk sector sees those high reward side of things and a lot of euphoria, and it certainly changes. But look at IIPR, and you're not going to find many marijuana stocks that are holding on this well. The weekly time frame, it is just trading fairly straight across the last few months, but we're right on the verge of all-time highs, and we're still in a weekly uptrend. There's not many marijuana stocks in a weekly uptrend right now. Support is 78.73. This is definitely a higher risk, higher reward name. You can see in just 1 week, we went from 78 up to 91. Big time back and forth volatility. And if this level were to break 78.73, that would shift our perspective and we would look for monthly consolidation. But as of this point, again, you're not going to find a marijuana stock that's looking this strong with a monthly higher low every single candlestick here for the last, we're talking 10, 11, almost an entire year on the monthly chart where every single candlestick is a higher low. If that breaks, then we're going to look for healthy monthly consolidation. Look at the 12-period exponential moving average support, holding every period of consolidation, hardly ever touching it, just holding just above it. So we'll be watching if we get a break of this weekly support level. I'll zoom out to the monthly and I'll look for that monthly higher low to form. But this is a place to be looking. And again, the dividend here in this REIT is definitely attractive. And in my opinion, that's why it's holding up so much better than the marijuana sector as a whole, because it's guaranteed money and the market likes guaranteed money. It's certainly a security blanket when there is uncertainty out there. Of course, gold. So gold is in a multiple year monthly pattern, somewhat similar to EPD, but not quite exact. But what I'm watching is this monthly equilibrium that's played out for years, and we just have a continued tightening range of higher lows and lower highs. And right now it's looking like our monthly higher low has just formed. And if that is the case, and if 119.55 is that monthly higher low, in my opinion, this absolutely favors the bulls in this setup. If we were to have pulled back all the way down to 116, it would have brought us much closer to the middle of this tightening range. But if that's our higher low, in my opinion, that favors the bulls. And you could even make the argument that if you just focus in right there, that you would call this a potential bull flag looking for a breakout. If we get a bull break of resistance of 127.21, the bulls really want to ensure that they get the follow through to take out all of these resistance levels very shortly. Because the last thing the bulls want to do is be overextended and break 127.21, that resistance, but then fail at perhaps 129.51. That would be a red flag if we can't break all these resistance levels and see a big volume spike at the same time. So the market uncertainty right now, the past week, has really given a bull boost to gold. The best case scenario for gold is when we see the dollar go down and the market go down at the same time. And we look at the dollar, and the dollar is still very strong. If that changes and we lose the weekly uptrend on the dollar and the S&P 500 is still in some shaky ground, the gold bulls are certainly going to be looking to benefit. And I like watching GLD as just straight up gold as opposed to the miners, which do have an impact. You know, if the market's going down, those miners are influenced by that because they trade on the stock exchanges as well, and there is some correlation there. But as far as GLD goes, why the monthly time frame looks to be set for the higher low is the weekly trend change. We have the low of 119.55, high of a bounce, which is just a weekly lower high, which we've been setting, held support, and now broke resistance. That's a little higher low and higher high with a weekly trend change. That's showing me the monthly higher low has likely formed. Now the question is, can we break 127.21? For me personally, if I were a bull, I would want to see a bull move up here a weekly higher low. I wouldn't just want to go right up and break 127.21 because, again, that's a scenario where the bulls could get overextended and not be able to take out these other resistance levels and then leave some uncertainty. If we get a tight pattern with a clear break with all resistance levels falling, all traders and analysts recognize the same thing and say, wow, that's a very bullish move, and there's no doubt or no uncertainty. So I would like to see a weekly uptrend start to develop with some consolidation along the way, establishing some support levels before getting a clear break. So gold is certainly another place to be looking in market weakness, and Bitcoin as well. So a lot of people who are trading the markets and looking at long-term portfolios are not active in the cryptocurrency space, and Bitcoin is definitely gaining some attention as far as being a safe haven, and CNBC is helping spin that narrative. And if you are a Bitcoin bull, you welcome that narrative, because anytime there's market weakness, if Bitcoin's going up, that's a reason that, and again, I've talked about this before, where the huge bull move that Bitcoin saw in 2017, it was so insane that everybody couldn't really put their finger on, what's going on here. And there wasn't a reason. Again, the market and the herd need a reason for things to happen. They don't understand blue sky breakout and all these technical analyst terms. So in order for them to understand and be comfortable with why something's going up, the market collapsing and Bitcoin going up 100, 200%, that makes a lot more sense than the Bitcoin just going 200% out of nowhere. So that narrative, if that keeps getting spun, I think that can be beneficial for the cryptocurrency space as a whole if we do see market weakness continue. And really, we would want to see, if that's the case, we would want to see the monthly time frame lose the uptrend in the S&P 500. But if you look at Bitcoin here, it looks, wow, this is a really bullish year, 2019. Of course, you got to zoom out and look at where we came from. But the fact is, in 2019, we have seen about 180% bull move off of the lows. There has certainly been a lot of opportunity, 190% for these bulls. And the question is, can the bulls keep up this strength? The monthly time frame certainly completely inverse in May to what the market was doing, with a huge bull volume candle closing up near the high, whereas the S&P 500 was a high volume bear candle closing near the low. So let's keep an eye on the cryptocurrency space as well. If you are not familiar with it, it's worth learning about and keeping an eye on. Whether or not you believe in it or believe the hype doesn't matter, because if we see the market start to accept it as a hedge, you better believe it's going to go up a lot when we see market weakness, and that's due to the limited supply and the halvening. I've never said that word. I've read it 100 times. Halvening that's coming up. And if you are looking to get exposure to Bitcoin without trying to deal with all the wallets and things like that, it does have the GBTC ticker, is the Grayscale Bitcoin Trust. I personally would only be looking at this name if you are looking to set it and forget it and just hold it and not do anything, because you are at a disadvantage in the sense that Bitcoin's trading 24/7 and this name certainly is not, and your hands are tied for 2/3 of every single day, where if Bitcoin's making a move, you can't sell GBTC because the market's closed. That's a disadvantage. But like I said, long term, set it and forget it. This is exposure where you can get access to Bitcoin and cryptocurrency exposure, Bitcoin specifically, without having to go through all the wallets and things. And I do think we're just going to see continued instruments with the availability to easily access money. And it's the kind of thing where, the ability to easily get in and out is certainly something that is missing in the cryptocurrency space right now, as far as looking at the big picture and the trillions of dollars that are sitting in retirement accounts and hedge funds and all this stuff. So that will continue at a slow pace to change, and there will be more exposure and more instruments, in my opinion, that allow exposure to these cryptocurrencies that you can access just through your regular brokerage account. But for now, it's pretty limited. So this is just a broad overview to get your mind thinking in terms of outside the box or other places to be looking, and REITs and dividends and different places that can potentially be a good bet when the market is showing weakness and the high flyer tech sector is certainly pulling back significantly. And again, just not easy money with the market at all-time highs. So hopefully this was useful. Again, just looking to provide some stepping stones for you to go down your own path and do further research. And I appreciate you watching. We'll see you next time.